This is our April 21st backtesting session. And let's do what we usually do for backtesting. Go as far back as we can. We don't know what happened on any of this within here. Maybe let me just bring it into about 8 o'clock Asia, 8 o'clock Eastern Standard Time. That's when the volume starts to pick up, or the volatility starts to pick up at 8 p.m. Asia. So let's go in here and let's see what we have here. Now, this is not much, obviously, for us to, utilize. This is just pretty much wherever this is. We don't know if this comes from down here. We don't know if this is indeed from somewhere up here. We have no idea where this is coming from. So we don't know what our swing count is going down. We don't know what our swing count is going up. We have nothing to work with other than the fact that it opened up this large candle, pushed up, created a range, and pushed higher. So let me just get this out the way. We know that we're in Asia. Let me see, maybe I could skip ahead a little bit. And get us out of this range at least. All right, there we go. So this is all we have. It's the last zone created below. Should this end up trading up and back down again, I would expect it to take out this and this low here too. That wick low as well. We see that we created this down move. We swept it from this high. We swept this low, and then we traded back in. So even though this is a failure to close, I told you guys that when anticipating, I know this is something that a lot of people tend to look at. They see the equal lows here that runs this high and then the other high to the left. When anticipating this, what we need to have is, yeah, you have this low here, right? And then we have this low here as well. This is not equal highs. Equal lows run the high. Because this high has to be higher than the inside high. So we would have had to have a high right here that was higher than this high in order to call them equal lows. So we can't consider that equal lows at all, because again, the low on the left side has to have a high that's higher than the high that came from the right side. So that inside high, it could either fail to put in another low by not going below it, or it can just trade below it and then trade back in. And that would still constitute an equal low that comes back for this particular high in here to take it out. But if this inside high is higher up above like that than the high to the left, then it's not considered an equal low. What you would end up having is, if this trades back up here and it fails, we have another push up like that fails. Now that's an equal high in there that comes back for this low on the inside. So just make sure that when you are using that for narrative, you need to understand that that high on the inside needs to be lower than the high on the outside in order to classify it as an equal low. So this is leading into London session. Right now, all we have is this here to the left, that zone there to the left. And we'll zoom in some to look at what's in here. So we see that we traded below this low that also failed to take out this high. We tapped back into the 50% of the range and we shifted out, but the actual market structure shift is below this low right here, right? And we know that because we have let me make sure. Okay, we have this low into this high here. We put in another low here. We put in another high up above that. And that's the highest point that we saw price go with the delivering body closures before trading back below it, like this. So this is actually the previous range here. Yeah, up above right there. So there's two things that we're considering. Somebody asked, what is the date we're back testing? This is Monday, April 1st. So there's two things that we're considering with something like this. We understand that this move up, right? Let me just change the colors. Could just be facilitating a higher time frame pullback to push up again, right? It doesn't matter the little 1 minute shifts that we're seeing in here. We know that the higher time frame is what the 1 minute delivers, what 1 minute order flow delivers. So we can break below this here only to see us trade back up above it and then trade below it again, like that. Trade below the actual low that's in there. And this is where it gets tricky for a lot of people, because they see this and they begin to short. But this is nothing more than the top of the range here, right? Hold on, let me. It's nothing more than the top of the range there, and the bottom of the range here, with a zone just below it there. So you see how all of this is set up. We talk about structure, right? We just flipped up above this previous high, this previous validated high right here. That put in a low with a body closure and then traded up above the high over here and put in a body closure here to trade back up. So we shifted up above it right here. After taking it out, we immediately entered into accumulation. But we understand that within that accumulation, there's structure, yes, but we could accumulate above up here just to put in a low down here and then trade back up above again to what? Put in another high up above there. I don't know whether that's something that's actually going to occur or not. That's just something that I've seen in backtesting oftentimes, right? Seen in backtesting oftentimes. And that puts me on the side of looking for longs, right? So the other thing we have within here, let me just get some of this out the way. The other thing that we have within here are these swings on the inside, these internal swings. You put in that high, close below this, the first one. You put in that high right there, close below this, the second one. So we know we can put in another high here, trade back, close below, put in a third one. So what I would more or less be looking for is a move out of here to move back into that previous range there. And should we move back into that previous range and then go to putting another high above this high, that's fine. I understand that this, again, could just be facilitating a higher time frame pullback into a higher time frame continuation up above. But I'm still just following the swing count, which is the first part in my trading plan, right? I said trail your highs and lows. That's the very first part for me. The narrative is that we're in a range. So below this range is the bottom of the range, and above it is the top of the range. So I have the narrative. The zones are anything that I have unmitigated lying both above and below that range. And the confirmation entry is where I am looking to take up an entry to trade with whatever the narrative and structure is that I'm using. So this is why I say take two structures with you, not just using 1 minute and 5 seconds. That's not structure. 1 minute and 5 seconds, you're using that as an entry combo for an area that you're getting to based on whether it's the 5 minute, the 12 minute, whatever it is you use from the higher time frame. But I mean, you can use the 1 minute and 5 seconds. Yes, that's entirely true. But at some point you end up getting lost, and that's what we want to prevent. We want to prevent getting lost in price. So the only thing that I have is here, right? Let me just move out some of this. Yeah, move that out maybe right there. And I'd consider that. Okay. So based on this, let me put this in the chat for you guys to actually I think I turned off charts. Let me turn it back on real quick. All right, I put the screenshot in the chat. Just mark it up and show me what you guys would have marked out for if you were looking to take an entry in this price action. I said taking entries. I don't care about your analysis. Would you be taking, where would you be taking entries? I'm not looking for you to guess. Entries. You saying that it can come down here and then go back up there and it comes that that's not an entry, because by the time you take your entry, you're going to be longing from up here to go that way, and you're going to get margin called on the way down. You're going to be shorting out of something right here, and you're going to get margin called on the way up. So I don't care about what the actual analysis is that you're saying. I care about the entries that you're taking from there. Okay, okay. So we have quite a few drawing in there. So let's move it forward. So now we see this pushing out, right? We see this trade below this low, tap into the top of the zone here, and we see this push like this. And we see this push up. So most of the entries I see people looking to take are from down here within this zone here. As you can see for most of the entries. And then there are other people who are looking to short this, which I hope it holds for you. Good luck on that. So let's play it forward a little bit. So let's just update our swings, right? It's the third swing in there. We tap into here, but we don't entirely take the low. That would end up being an equal low. If you were trading futures, that more than likely would not have stopped you out, because it needs to cross over that low in order to take you out. So for me, if we can trade up above this here, I would take this into the zone there. We'd more than likely push on here and try to move further. So for me, if it was a little scalp from here to the center of the zone, I would take that. So nothing. Would anybody go long here? Okay, let's move it. So whoever went long, there was a nice little long pattern that came out of there. And this is why you do not target highs. This is why you target zones and you look for one-to-ones in those moves out. Because if you were targeting this high, you would have watched price come all the way back to you and either trade to your entry and take you out at break even, or run that low. So there's a few people waiting for a long just below this. Let me see. I'd say another bounce at 71, but I'd wait until we trade below 69 to look to trade back into that range. So there was a few people that had mentioned that they were longing from here, right? You guys were longing out of here. You guys are still considering that long? No, why the change? Okay. If I were to take a long out of here, it would probably just be right up above this high on the inside here. Or even this little wick right here. But I would now be anticipating that that move up just brings us back into another low down here. For what? To bring us up again. Like that. Because we have this low here. Even though this is not technically a break from this low to this high, and we trade below it, we see the equal high forming in here, and us digging deeper into this zone to potentially what? Give us a move up off of it, and then go and take the low of it to, remember Friday's stream, I talked about how we oftentimes look for shorts in areas that the market is looking to give us that higher time frame pullback, and that's how we're getting tripped up a lot. So in the event that we take that low, this becomes the new swing here, and just below it we'd be looking to swing around back into the range there. For what? The possibility of another short down like that. So that would be my narrative for why anything that I'm trading would just be a quick scalp that is against what's currently taking place here. And I would know that if I was doing any buy stops or whatever it is, it would be a short-lived scalp against the trend. So we have this zone here to mark out. Would anybody be shorting on this here? Okay. So let's move some of this out the way. Let's go forward. There's a few people that said buy stop here, right? With the stop just below there. This is a candlestick structure flip inside of here. So how do you guys feel about that candle there? This is London Open coming. That's not an indecision candle. 258 candle. So if we could sweep this provided down candle in here and trade back up above it, I'd be looking to take out these highs and tap back into this zone here. Only given that we get a sweep. So some people held on and they got that reward back to the top, back within this range right here. Nice entry. And there's the 50% of the zone delivered straight down, giving the 1-to-1 of the zone right there. Trading down off of it. So seeing what we have developed here, let's just move some of this out just so we could clear it up a bit. Seeing what we have developed here, what are you guys thinking? You guys thinking that we're pushing back up above to the highs, or you think we're still trading lower? Okay, it's mixed right now. I would have it going lower, simply because we have this low into this high. We have this low into this high. We have this low. We put that there, but we have yet to put in another low. And I told you guys that when we get to the third swing, that's where I'm done continuation trading, right? That's where I'm looking for the market to now reverse and begin to create some upside within here to disrupt or take out some highs that are in there. But right now I'm still leaning towards below this low. Somebody said fifth swing. So let me do this real quick, because I see you guys have not watched any of the videos properly, or you think you watched it properly, you didn't take notes, and you just going by what you think in your mind. So let me just go over this real quick. Where are we? So when we have little swings inside of here, let's say we started with this up top, and we're heading down like this, we begin to create some consolidation in here, and then we drop below, we head back up, and then we drop below, And now we have 1, 2, 3, 4, 5, 6 in there. And we head back up here. We probably barcode in here and then drop below again. These swings that are in here, you're not counting these little tiny swings in here as swings. So I see people talking about the fifth swing in here. There's no such thing as a fifth swing in here right now. We have a swing here, right? Let's start with this. We have this swing there. We have a swing here. This little tiny swing inside of here was invalidated when we traded up above the high, right? We traded up above the high, and then we put the other low in below here. So this doesn't count as a swing because this high invalidated this being a swing on the inside. And that replaced it with this third swing here heading down. So if you are counting these on the way down, this entire one here becomes the third one that's there. These little tiny ones inside of here, they are not counted with these external ones over here. They're not counted with that. And this one inside of here, the smaller one in there, has been invalidated the minute we traded up above and then traded back below it. So when we invalidate that swing, we invalidate this inside swing right here, and we trade back below it, this becomes the new swing, right? This up move into this move down, and we just close below it right here. That becomes the new swing in us counting these. You see how it's within this larger swing? It's this low to this high, and then we swing down and close below. That inside of there is no longer a part of the swing count. And that's been explained in many videos. So do some better note taking and be more meticulous in what it is that you're learning. Otherwise, you would be counting these swings and counting the stairway to the top of the Tower of Babel, trying to figure out what swing count you're on when different swings belong to different time frames. Different swings belong to different time frames. So the larger swings are from the higher time frame. The smaller swings are from this time frame. And there's even smaller swings within there that are from the lower time frames. And this was all explained in videos 1, 2, and 3 of the free FREE, the free masterclass. This was also explained in all of the backtesting videos that's been released to you guys already. So if you're not taking notes, you're going to have these things wrong. And that could be the small thing that causes you to take a trade that you lose on, right? And then begins the spiral. And then begins the spiral. Because you're missing that little tiny detail that throws off your entire plan. So it's very important that you guys go back over that and understand that the smaller swings that are within here, they are just on the leg of this larger swing that's here. So let's say we're talking about this low into this high, right? The smaller swings that are in here, right? These are the swings that's inside of this low and this high. That's one path of swings that we're counting, right? But then we have these smaller swings that are on the inside of here, right? Those things belong to another time frame. They're not from this time frame, and they're not from this larger swing count either. So that's why I say that you have to trail your highs and lows from multiple time frames so you can understand that, and you're not tripped up with counting a small swing within here as a part of a larger swing count that's up here. So each leg, right? You guys see this up here? Let me move this over here. Each leg, that's this leg down, right? That's this leg down, that's this leg down, that's this leg down. Each leg can have a certain number of swings that are within that one leg, right? This could have 2 going up and then just create 1 on the inside going down. And this could have 3 going up and then creates 4 heading down. This can just impulse up, put in a down candle, impulse again, and then trade below it and just have a couple of red candles dropping down into this low. Each leg has its own swing count to it, but each leg is within a higher time frame swing as well. What do I mean by that? Each leg is within a higher time frame swing. That's the leg up. There's the leg that's going down now. Now the leg going up, right? And the leg going down now. Each time we trade below the up leg, that is a swing that heads up. We trade below it and close. That's another swing there, completed. This leg going up, once we trade down below the up leg, that's another swing created. So that's from a higher time frame. Same thing with this. That's another swing created. That's another swing created on the leg down. But we have these legs that go up that have their own swing count to it. And then we have these legs that go down that they have their own swing count to it from this time frame. But those legs, what they're doing is they're facilitating a higher time frame swing count. Each leg is facilitating its higher time frame swing count. So when we say 1, we say 2, we say 3, and we say 4, we're not counting these little things inside of here on the way down and then on the way up and then on the way down. We're not counting any of that because we're following what? 2 time frames. One above you and the one you're on as your swing counts. So it's important that you guys gain an understanding of that quickly. And that's literally just in trailing your highs and lows. Trail your highs and lows on the way down, trail your highs and lows on the way up. Highs and lows on this time frame do not belong to another time frame. Swings, larger swings from this time frame are just highs and lows on a higher time frame. Smaller swings on this time frame are just highs and lows on the lower time frame. That's why you have to spend time doing that. And there's some people that think that they found it, they got it. This is all I need. Now I just need to buy stop, and they buy stop themselves right to margin call. They sell stop themselves right to margin call. Because you don't know whether you should buy stop or sell stop because you have no idea where you are in both what? Your higher time frame structure along with the lower time frame that you're using. So it's important that you guys work that out. And back testing. So I'll give, basic examples within here where we have this move up into here, right? And then you see us put in this little low and then this high here. This inside of here is not a swing from this time frame. That's a swing from the lower time frame. So then we go and we put in this low. Now, this swing that you see here, this is from this time frame. But then we have these little smaller swings on the way up. In here, little down candle in there, the little move up, little down push there, this little move up. These are a part of a lower time frame, right? Those are a part of a lower time frame. But then you see this down move within here, and now that's back to this time frame, right? This one that we just counted going down. It's back to this time frame. It goes down again, and then it pushes up, and there's that failure to close up above. But before that failure to close up above, we have that little push up again with this high here of this wick. And then we have a downswing on a lower time frame that facilitates the move up on this time frame, right? So then we fail to put that high in, and we go back below this weak low. This is back to that purple time frame of moving down. Now we have that low there. Then we see that push up again, right? That's back to the purple time frame swings. So then we trade down below again, right? And while we are trading down below, we have these little small swings that are being created inside of here. That's on a lower time frame, and us moving back up again in this direction. Us moving back up again in this direction, what's facilitating that? The smaller swings that are within the lower time frame that's getting us there. And then we break below that smaller swing, right? And now we're trading down again, which is facilitating what? It's facilitating back to that purple swing that we've been counting from over here. But all of that is facilitating something that's back here from the higher time frame. So we need to know all the time frames that our swing counts are coming from. Because if you don't, then you're going to mistake these little tiny swings within here for the swing count of the current time frame that you're using, and then you're going to mix the swing count from the current time frame that you're using with the higher time frame that you're following, and soon enough you're just going to fall apart with that. So you want to be sure that, again, it's video 1. The first video of the playlist, video 1, which is talking about the multi-time frame structure. Very important. Yes, exactly. Fractals on fractals on fractals. Yes, that's entirely it. So, there's no fifth swing here. Whoever had mentioned that, you're not counting properly. And you guys are going to have this video to go over, to go back and look at how to properly count swings. What swing are you counting? Somebody, I said that a part of my trade plan, the very first part is count my swings. From what time frame? You can't just say count your swings. You have to say from what time frame you're even utilizing the swings from. You think a swing is just a swing because you see that it was a down move on the time frame you're trying to trade? No. So you need to be sure that you're following multi-time frame highs and lows, multi-time frame swing counts that you have. Because you can be bullish on the 1 minute but bearish on the 4 hour. You can be bullish on the 1 minute right now, and the 15 minute could still be bearish. So it's important to know, the swings that your entries are coming from. Because the swing from the 15-minute can just be facilitating a pullback for the 4-hour. The swing from the 1 minute can just be facilitating a pullback for the 15-minute. And you're thinking that we're bullish, and now all of a sudden you're targeting a high that the 15-minute is saying, no, 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 hold on here. Wait a minute. Wait a minute. We're still looking that way until we take something significant enough for us to now move back up in this region. So that's why I say that many of you guys' issues will be solved in backtesting. I'm telling you, all of a sudden I'm a white supremacist now because I told somebody to backtest. And that's how real it is. That's how much anger people have towards backtesting. And they want to just quickly get into the environment of, I want to trade live. I want to make the money live because in backtesting is not real. No, backtesting gives you the blueprint. Gives you the blueprint of it. And yeah, somebody did call me a white supremacist because I told them that they need to go and backtest the question that they asked me, and it was about swings. So yes, this is just that people have this innate anger towards wanting to delay the gratification, the instant gratification that they have, and they'll say anything out there in the world. Oh, he's just telling you to backtest and watch the videos 10 times so he can get a revenue from the videos. I'm like, what? I use copyright music. I'm not making no revenue from those videos. This is copyright music. I didn't know anything about that back then. So it's still, at the end of the day, whether it is that or it's not that, you still have to backtest. You still have to backtest. It's very important because it's going to help you to understand what these smaller swings within here represent and how it doesn't get you caught up in, trying to use the smaller ones with the larger ones that are there. They need to be separated. There's plenty of SMC guys on YouTube who they use market structure, but they do not use it in the way that I've taught it, with body closures, with what constitutes a swing. What constitutes a swing? So a swing is that when we have that up candle that forms, right? Let's say we open up and we put in a high. Put in a high like that up above the up candle that's there. And this is basic stuff that y'all should already know. We put in a high that's above the candle's previous high right there, right? So let me just change the color to neutral. We put in a high above that high, and this candle is a red candle. It opens up and it turns bearish. It goes up first, but then it turns bearish and goes down below the low of the bullish candle. It needs to provide a body below the low of that bullish candle. Needs to be a body, right? So now that you have the body that closes below that low, that validates this high and validates what begins as the pullback. But that pullback could just be heading into some zone over here to where now we trade into it and then we go back to put in another high up above this old high. So that move down that we have here, is what we are calling the swing. Move this out of the way. That move down, that green candle, and then the red candle opens up, takes out the high, and then drops down below to close the lowest point that that red candle went, or the lowest point that, even if it was a series of red candles, the lowest point that it went before the bullish candles started to push out and go back up. That is the swing down. And then we trade up. But this swing can only be validated as a swing if that closure happens below that candle, right? We trade low, trade below the candle, and then we go back up and put in what? A body, right? Up above that high. We put in a body up above there. That's what makes this entire thing a valid swing. And that's for every time frame you are on. Every single time frame that you are on. That's what validates that. So you could have a validated 5-second swing that's not validated on the 1 minute. You could have a validated 1 minute swing that's not validated on the 5. That's why it's important to take multi-time frames with you. It's important to take that with you. So, the conversation about what's a valid swing and what's not, those things have already been discussed in many of the videos before. And if you just go back to your notes, which you were told to take, but some people just don't want to take because they think they're going to become profitable without taking notes, it's going to take you some time, it's going to take you a bunch of losses. You might have to lose the house and the wife and all of that other stuff because you want to be hard-headed and just not take notes. I had people that came to me months later and said, hey, if I just followed it the first time the way you said, I wouldn't have lost all of the time that I've lost. And I can't stop people from wanting to go that route. Some people, they desperately want to. They desperately want to follow themselves. And nothing I can do about that. I have to watch them gain success temporarily, crash and burn, try to figure out what's wrong with them, keep telling them what's actually wrong. They don't want to follow it because they think it's something else, and they think there's some other holy grail that they have not, found yet. And it's literally in the very first thing that I talk about. And I talk about structure, narrative, zones, and confirmation entry. It's literally in the structure. It's literally in the swing count. You can be profitable just by counting your swings. You don't need anything else. All the other stuff is bells and whistles to figure out when the range is forming, and all these different styles of entries that I find that I'm able to just quickly tap into with almost no drawdown, and the tightest stop that's there, and that's all bells and whistles. Literally, you count your swings and it saves your life. You count your swings and it takes you into the place where you can consistently make money just by counting your swings. You don't need the rest of the stuff. The rest of the stuff is nice to have to reduce the risk, to calm down the anxiety that comes in the entries that you take. That stuff is great. Great to have. But the truth is, you only need the first thing, structure. Take your swing count with you, and every day could be a profitable day just off of counting your swings. You don't need to know when a range is going to form. You don't need to know, which one is best to use, which zone is best to use to trade from. You don't need to know any of that. Just count your swings. And you'll be on to counting your coins after that. So I think that's important to spell out in detail as we just went through of what invalidates. Do you see the swing count going down? We talked about what invalidates a swing. So when you see me counting, you see me skip over a little swing that's in there, it's because it was invalidated when we traded up above it and then traded below. So that's how people run into those issues, not knowing that this swing is invalidated, so you do not count it with that. Then they end up with you you end up counting more swings than the staircase in the Empire State Building. Just 4 to 6 swings and price reverses. 4 to 6 swings and price reverse. And if price reverse is off of 3, then hey, it caught you by surprise, and now you gotta change the swing count. And sometimes when we do that 3 swing count and shift, a lot of the times that shift is just a pullback to go back up above that 3rd swing again. But I'm not gonna overload y'all with information. Let's continue moving forward with this. I know y'all gonna be like, "Oh, I can't wait to watch this video." So yeah, I would be waiting. We see that push up above like this. Okay. So is there anybody here that would be looking to take a long to trade higher from here? Or is there anybody that's still short to go and take this low? Nobody's taking it long. Okay, I guess I'm gonna get liquidated by myself then. Cause this is a nice swing to move in to potentially find a nice ride off of to push higher. And it's only because what? I mean, if I'm wrong, I'm wrong, but it's only because I'm looking at the swing count internally. The swing count internally here in this leg down gave us 1, 2, 3, 4. And then it traded down. That 5th one failed and it moved back that way. So it put in this swing and it would make me believe that we could have another bounce into there to put in another swing up above there. But that's where I'm done. I'm not counting. I'm not, trying to call tops and bottoms of anything. Oh, this is the bottom here to go and take the high up above there. Or that's the high up there, and I'm expecting lower prices to go down there. Remember, I don't have enough money to put in a new high or a new low. I know that based on the higher time frame, what we have here is a low right here, and we have a high right here. Just this extension up, right? So anything that we are in within here becomes the top of the range and the bottom of the range here. So it just leads me to believe that we are in a larger range that's there. With price particularly, the possibility of it getting back into that up above there, which would end up sweeping these highs, tapping into here, and then manipulating down to there. Like traded all the way up into it. And took out the high of it. Right there. So I'm glad that this happened, because this is where in the New York session, everybody's grasping for straws to try and short down every little thing that's in here. Maybe this imbalance will hold. Maybe this little up candle in here. There's an unmitigated zone right here. While the only reason why I'm on this side is because of this. Counting your swings is at the forefront of every single move you take. I told you structure, narrative, right? Zones, and confirmation. Swing count is in the very first thing. So if I'm counting my swings and I see that I'm only at this little second one in here, I can't counter trend that until the third one for me forms. So I have to be on this right side until it shows me my plan right in its hand. Just because it's going into something unmitigated to the left does not mean that that warrants me to be able to take an entry off of it. It's unmitigated. It's swept this high. I'm expecting it to go in and I'm going to take a short out of it. What happened to the first part of the plan? So that's where I was here. While a lot of people said, no, they're not taking a long, more than likely you would have fell wrist to a short to the left because you were already against the long side. And it's those little things that end up causing us to take certain entries that are not within our plan. Oh, I'm not looking to go long here. So then why are you short? There's nothing that showed up as of yet for you to say take a short. Just because we got to a zone does not mean take a short. So we sweep this high up above, up here, right? Now I know that we can push higher, but this is where I begin to either expect consolidation at the top of here with the possibility of reaching back in to the zone that we put below. Now, reaching back into the zone that we put below does not mean that I'm long for us to trade even higher. It means that now I would begin to look for entries on this side to take as the pullback within there, knowing that we have this just up above. We have that shift that happened below. And this led us all the way down into this area where price originally sent us down below this low. So that the likelihood of a short coming out of here is a lot higher for me than me trying to short anything within the bottom of this range. As we mentioned, this is going right back to the top of the range. So I'm going to zoom back in to go to our swing count. In this leg up, these little down candles are swings from another time frame. That's from a lower time frame. So if we are to push further up like this, I would look for a short back to here, whether it's a sell stop short or, um, clear down move into the up move, shift below it, trade back in, and then head down here. Either way, I would be looking for some sort of consolidation up there to move back inside of the range. And this is how I approach each part of what price is doing. There was a few people who mentioned that they were taking a long over here, and it's fine. Your long delivered. You tapped into 50% of the range, and it delivered that 1-to-1 right there for you. Fine. You got that entry, you saw it through, and it delivered for you. But a lot of the times we get this entry, and this is what's detrimental to a lot of people trading here. I saw somebody say they wanted to take a short up here and a long down here. For what? You're not even profitable. You can't even pull money out of the market, and you're looking for a short here and a long there. For what? How about you look for the one that's more likely, rather than trying to trade both of them? You trade both, you lose both. You trade one, you win it, you lose the other. Now it's as if you did nothing at all. Rather than just choosing one side to be on. And it's the side of, obviously, narrative. So let's move back in here. Nice little push coming out of there. So we have this. Actually, let me just go back to. Let me give you guys the chart to mark up again. I put it in the chat for you guys to mark up again. So let me set up why I'm considering a short out of here. Well, when we get back to a major high, we know that we trade away from it. When we trade up above this high, right, we're expecting some sort of, small accumulation within here, right? And we're expecting a pullback into this previous zone that we have down below right here. We know that within these smaller swings that are in here heading up, we know that we're almost to the fifth swing from the lower time frame, and we're on the second one from this time frame, right? But we're trading back to the origin of the move. Where this entire move traded down, we're trading back to there. So we know that there are people who are going to chase this high up above here, right? Chase longing through this high, knowing that when price gets near structural high, what do we end up doing? Pulling away from it. So if I am to take an entry and not wait for us to get back to the bottom of the range, which is down here, it would be a top of the range short up here. So all of that is already set up in my mind mentally. Now that doesn't mean that the price can't go higher. Price go higher and just rock everybody. Rock everybody's expectations. But that's my reasoning for why I'm going short. And the plan is to look for a potential entry within here. Again, whether it's a shifting of a low, tapping back in, and then shorting back down. And I told you where exactly I would be looking to a short to. Or looking for a sell stop entry up above here. Knowing that the first sell stop entry could very well be wrong for me, but this is the London session, so the ranges are smaller and it really doesn't matter. because you're not losing 20 points on one sell stop candle versus, the possibility of losing, I don't know, what is this, 595 to 598, 3 points on a London candle. So sell stop gave a 1-to-1 on it, but you saw us push back up again into the high right here, which gives us another one that looks like this right here. So the last possibility of a long is off of here before we fail. But what are we considering here? We mentioned that the zones that are created at the top of the range, price looks to liquidate them. So if we could move up above here again, I'd look for us to trade in here, back up into something here, and then through that low there. And I know it's coming out of something to the left here. Like that. And that. And that. Okay. So you see the tap back into there. Like we mentioned, another move off of that, and then potentially down and take the low. And if we begin, this is what I want you guys to consider. If we begin to now move down to the other side, right? Down here, what you guys have to remember is that in the momentum heading down, sell stops below bullish candles are better for you to use than trying to buy stop a pullback into them. Sell stops are better below a bullish candle. Sell stops are a better choice for you in that momentum down. Now, I'm not saying that the momentum is heading down now. I'm just saying that that's what you guys should consider when we're up in these highs. So there was a few people that had already mentioned that they were taking a short out of this zone here. I know for some of y'all scared right now. And your 1-to-1 is so far down here, but that's the zone you chose. So if that's what you shorted out of, and you got into a short in the 50% of it here, and your stop is right behind here, even if this climbs all the way to your stop and then turn around and head the other way, that's the zone that you chose. Accept it, accept the risk you put behind it, and accept the loss should it occur. So there goes that sell stop right below this low, right? Like I said, the first one, there's a possibility that that one fails. That's fine. That's equivalent to what? We talk about toilet paper people, right? They have this huge shoot up. They trade down. The people who think that they're first in taking price back down, they go and get ran out, and then they trade back below them, right? Below the guys down there who ran them out at the top. So you end up already having a potential target, which is below here. And that's why I had mentioned a bounce within here, a trade back up. You can get another bounce within here, but then we would end up trading below this All of that is in the concepts. I just think about it faster and sooner. So let's click forward. You see the other bounce in there that we mentioned. 1-to-1 delivered on it too, right? And this is where people are up here looking to long, and they see price lean them back down that way. So again, I'm not entirely saying that price is looking to go down here. We'll look at the developments of it. But this is where you do not want to be longing in the top of the range. You do not want to be longing here. You do not want to be trying to take any entries off of the zone that's created at the top of the range and thinking that you could potentially get another high out of price. Because that consolidation just is created before the move back the other way. All of these things, I mean, I get it. It's a lot, but in order to make trading easier for you, in order to come into the market every day and make a better decision on where you're looking to enter and the whys behind you entering, you have to have all of that at your disposal. You're just not just clicking a button because, oh, we tapped into an imbalance so long. We tapped into a zone so short. Many of you guys already know how that has turned out. You found some success with it until you started to fall apart with that. Bam, right through that low. Now, when was that concept released to y'all? In the videos that you first got when you came here? That you think is not important for you to go and watch? You think it's not important to take notes? You think it's not important to go and back test each time it happens? Just back test when it happens. You could spend the whole day just backtesting that simple thing. Backtest when it happens. It's going to happen in the top or the bottom of the range. And then you have simple targets and you have simple entries that now you can protect those positions. This creates a down candle. If this ends up creating more down candles on the way down, guess what trails with you? Because y'all like to be greedy but don't know where to be greedy. Guess what ends up trailing with you? Your stop. Should it end up moving all the way down here? Now guess what? Because you didn't find a position up there, you're not subjected to try and catch a fallen knife down here to just give you a little something up there because you missed the move going down. And now you're trying to counter trend it. You'll see that guy with the stop? He said, oh, I'm going to take 5 points. Then he said, never mind. He said, I'm going to just trail it down on in there because it looked like they... I mean, originally, where did we say the short would go to? Here. And that's not saying that this is going to hold and bounce off of it, but this is where we were looking. When we got up here on this 324 candle, we said this is where we would be looking to target down here. And now that 1R entry up here that was properly protected, and you begin to watch it trade down, now you're trailing with your stop behind there, and all you were risking was this little guy up here. So all you're risking was this little candle up here. 1 point, 1.5 points. So when we do something like this, y'all, when we do something like this, April 19th, it was touched on but not covered entirely. It was taught in the backtesting session that was released to you guys as homework when you first got here. So scroll all the way up to the videos at the top that was released to you, and you'll see that it's in plain sight. You just didn't think you needed to watch long videos. And that's fine. You know, I can't say anything about that. You don't have to take your learning seriously. If you want your kids to suffer from anxiety because growing up in poverty because you don't want to do your job, trust me, I had kids that they still suffer from some of those things. And I'm letting them know we have more than enough now. We have more than enough. We trust me, if it ever went south, I'd be able to pick myself right back up. I have a skill that I learned just for you guys. You don't have to worry about that. You don't have to think about that. But I put them through that. I gave them that anxiety. What if we don't have enough? And for you guys, you don't want your kids to develop that. You don't want your kids to have to think about that from a young age. Let them be kids. So in the event that we're trading down like this, what are you guys looking at here? Let me put this back. Look, this is a perfect example of a comment here. Paul, he said, and I'm always chopping Paul up because I know he can get it. He got that curiosity that's going to take him far. He said, the run through of Dave's free masterclass I watched fairly closely, but after video 5, I did them at 1.75 speed and missed a lot of stuff. But I did another run through with notes, and it's changing my trading forever. The market moves as slow as I am talking in those videos. So if you speed up those videos and you speed up the narrative that I'm giving in those videos, you're adjusting yourself to an unrealistic moving of the market. You're adjusting yourself to the market moving at 1.7 speed. And the market doesn't even move that way. So now your brain needs the market to move as fast as you studied. And when it doesn't, that's when you start to fall apart. That's why it's important for you and anybody else that's here that's thinking that they need to watch the videos at fast speed. Trust me, the market doesn't move that fast. You need to slow down. You need to slow down. I am speaking as slow as the market moves. You are in a rush. The market is not in a rush. The market is not in a rush. Because guess what? The market is going to do the same stuff over and over again. We already mentioned that going up as to why we were looking for a short. Not even knowing whether it's actually going to short or not. Now, the people up here, they escaped that. They said, okay, yeah, we got our 1-to-1 there. Bam, 50%. We just left it there and hope for the best. Bam, taken out. That's for the people who have enough patience to do that. Do you know how many times the people who are moving too fast see price get into a zone like that? And how many times they got stopped out here and stopped out there and then stopped out there again and then stopped out there. And then they got that trade, but they shifted to break even too early. And then they got taken out there. And then they saw it go below here. And they said, oh, it's going to put in another high here. And then they got stopped out below there. And then they said to themselves, if we start to go back up, I'm going to get into a long to take out these relative equal highs because price is attracted to it. And then we're going to see price go back for these highs here, and I'm going to remove my stop loss, and then they watch the rest of the account go down as it's heading that way. Because moving too fast, and price was literally showing his hand here to us. Showing its hand as a reason for why we were looking for shorts up here and longs below here. Understanding that price is in a range. So where are we going? We think we could send price to a new high or new low? Absolutely not. So let's move that forward. Now we just have these large candles dropping down, right? Somebody's still trailing up here. Somebody got their stop here. Somebody else put their stop right behind this low here. But however you trail is the way you trail. I always say that a good rule of thumb is to trail behind the down candle highs, because should price end up wanting to trade higher and we get a close there, and that close is sufficient enough to take us back to where your entry was, at least you squeezed out most of it in that move. But this very well looks like it's heading down to back into the lows here, at least down below this wick low here at 76. But this is that 4 candle drop. So we know oftentimes what we get is a pushback in here and another drop below those guys there, just like we predicted up here. Because as it is above, so it is below. Look at that. They're just selling that bad boy off. So they gave nothing at all. These guys are just trailing behind these down candle highs. They're just eating. Just swelling up their belly. Beautiful. So trading can be as simple as following a plan. And your plan can be as simple as following what you've been taught. And what you've been taught can be as simple as backtesting and verifying it. Backtesting and verifying it. Backtesting and verifying it. Backtesting and verifying it. That's it. Backtesting and verifying it. Now, if you didn't get in this move going up, it does not mean you missed it and now you have to counter it to make it go down. One of the biggest issues I've seen with students in general is that the minute we put in this low, and because we got nearest to this, they start shorting out of here. Start shorting out of there. Shorting from above here. Shorting from up here. Shorting from up here. Trying to short from up here now to get back into the zone, right? Shorten from up here, and by the time we get here, now they're longing at the bottom of every wick. They see a wick form and they're like, up, that's a wick, so the next one's going to open up, tap into the wick and go higher, while we just in this move dropping down just like that. Why? Because this could be facilitating what? The high, right? We put in this low, we go back up here, right? And that can just be facilitating what? The second swing from the higher time frame. That's what I said. Carry a higher time frame swing with you. Carry one of those with you, or two. Carry the one from above and below. So go to the 15-minute or the 1 hour and carry a swing from the 1 hour or the 15-minute. Carry one from above and below. And while you're trading within your 1 minute time frame, understand that those two things are where the larger moves are coming from, while you scalp in between these shorter moves. You'll see that most times when we begin the range begins smack dab in the middle of a higher time frame zone. That's where your ranging begins. It could even begin right at the top. Have a little push off the top, and you think, oh, we're going higher, and then we dig further into the range, and then we finally go higher. So some of those trading plans, let me actually